Good morning, I'm Clinton Griffiths. The sell-off in the commodity markets continued following the July 4th holiday. But is this evidence yet that inflation has peaked? Ag Day's Michelle Rook has a closer look.
Clinton, one signal inflation may have peaked is the yield on the 10-year U.S. Treasury note. It's off its highs. Another clue, falling commodity prices. Crude oil, wheat, natural gas, lumber, corn, and other raw materials ended the quarter near or lower than March prices. A J.P. Morgan Chase commodity strategist says about $15 billion moved out of commodity futures markets during the week ending June 24th. It was the fourth straight week of outflows, bringing the dollar amount pulled from commodities this year to about $125 billion. That's a seasonal record that tops even 2020. Market analysts say funds are bailing, and that accelerated last week as long-term chart support was breached in most of the grain markets.
They just decided, I don't want to be long anymore. I think the recession fears are really starting to spike higher.
Any manager, does he want to throw money at something like that when there's probably something else that in his view is a safer, better place to ride out the recession in, like an interest-bearing instrument perhaps?
As of June 29th, the funds liquidated nearly 37,000 contracts of corn and were only 228,000 contracts long, their smallest position since October 2020. Funds also sold 30,000 contracts of soybeans. There are only 1,000 contracts long in Chicago wheat, 25,000 in Kansas City, a 51-week low. And this doesn't count the liquidation the last few sessions.
It was a bad week across the board, and I think the worst of them all was, quite frankly, has been the last 2 weeks of the complete destruction of the wheat market. And wheat pretty much led this market to the upside, and it's now leading it to the downside.
More favorable weather is also pressuring the grain, so how much more liquidation could we see in these markets? We'll find out in our market analysis.